Hi students, how are you? This is N. Srinivas Reddy, JL Commerce, TSWRJC, Hattunura. Students, in this video I am going to discuss or prepare the one problem under the fluctuating capital method. So student, this problem is third problem in our chapter. First of all, I will read the problem now. Here the A and B are partners sharing profits and losses 3:2 ratio. According A contributed 2 lakhs, B contributed 1,50,000 towards their capital at the beginning of the year. Their drawings during the amounted to 10,000, 12,000 respectively. Mr. A is entitled to 8,000 and B is given commission is 10,000. Interest on capital is 10% per annum. Interest on drawings to be 500 for A, 600 for B. Net profits before above adjustments amounted to 62,000. Here they are asking prepare profit or loss appropriation account and partners capital accounts under the fluctuating capital method. Students, here according to this problem what they are asking is, here the two partners is there. They are the A and B. They are sharing the profits and losses 3:2 respectively, and A is contributed for the starting of the farm is 2 lakhs and B is contributed to 1,50,000, and they are asking business firm or the partnership firm is willing to give 10% on interest on capital. It means A receive 20,000, B receive 1,15,000. So and then they are withdrawn some cash for their personal, that is 10,000 and 12,000, and they are pay some interest on it also. A pay the 500 and B pay the 600, and they are working some in the business organization. For that purpose, A is getting salary rupees 8,000 and B given the commission is 10,000. So these are the adjustments here. Before that, the firm is getting 62,000 profit. Here they are asking to prepare profit and loss appropriation account and capital accounts of the A and B under the fluctuating capital account. Students, now we are going to prepare the profit and loss appropriation account, then capital accounts of the partners. Here already I prepared it and now we explain. So under the profit and loss account, it is a nominal account. Under the nominal account, all the incomes and the profits will come credit side, all the expenses and losses will be debited. So here is also is nominal account, that's why all the incomes or the profits is come under the credit side. So now we are getting here the 62,000 is a profit. So these are credit, it will be credited, and partners they are giving interest on drawings. So it is a income to the firms. A is giving 500 and B is giving 600. Total is 1,100. So normally like that, partnership firm is also giving interest on the partners. So A is the 10% on capital. It means on the 2 lakhs they are giving 10%. It means 20,000. B for 15,000 on 1,50,000. It means 15,000. So total is the 35,000. So next A salary get the 8,000 and B salary get the commission is 8,000. It is the payable for the partnership firm. That's why we are debiting it. Next is total. All the things are recorded here. Next we are totaling the two sides. So when we are observing the two sides, credit side is more, that is 63,000. Debit side is something less, that is 10,100. 10,100 is the difference here. So that's why we are difference amount is distributed to the partners of A and B. So here the partners of A and B are they are sharing the profits and loss of the firm is 3:2 ratio. It means A are getting the 3, B is getting the 2%. So here 10,100 into 3, it means 6,060, and B is getting 10,100 by 2, it means they are getting the 4,040. So after deducting all the adjustments, the remaining profit 10,000 distributed between the two partners. A get the 6,060 and B get the 4,040. So it is a profit and loss appropriation account. It is also one of the part in the profit and loss account. Next we are going to prepare or explain the capital accounts. So here the capital accounts. First of all, students, in what are the debited, what are the credited. So all the incomes, all the balance amount of the partners, all the incomes are the whatever they receivable from the partnership firm, that will be created here. Here the balance, it means when starting of the business, A started with the 2 lakhs, B started with the 1,50,000, it is created. Next is interest on capital, 20,000, 15,000, salary 8,000, commission 10,000 for the B. And after completion of the profit and loss appropriation account, A got the 6,060, B get the 4,040. It is the incomes they are receivable from the partnership firm. Like that, there are also some amount payable to the company, that is the 10,000 and 12,000. These amounts are they are withdrawn from the organization on the view of personal use. It means drawings. So that amount is also deductible from their accounts. So next they are liable to pay interest on the drawings. So here the A pay the 500 interest and B pay the 600 interest. So here after completion of all of it, credit side is for the A is 2,34,060, B is the 1,79,040. So these are the amount. So when we are observing the two sides, credit side is the more, debit side is the less. So that's why after completion of it, we are deducting from the credit side to debit side. A balance is the 2,23,560. B balance is the 1,66,440. So these are the present balances, are the present capitals of the A and B. So here students, if you observe here, when the starting of the business, A capital is the capital is the 2 lakhs and B capital is the 1,50,000. But the ending, A is the 2,23,560, B is the 1,66,440. It is changed because whatever the amounts is receivable from the company or the partnership firm, all are credited, and whatever the deductible, that will be debited in the partners accounts. That's why in the fluctuating capital method, every year their capitals will be changed. Due to that, this method is called fluctuating capital method. Students, in the next video I will discuss with the fixed capital method. Thank you very much.